Good afternoon, everyone, and thanks GIP for calling me to this wonderful event. It's an honor. And the theme of the talk is on my first slide, misallocation and economic growth. But to motivate my talk, let me begin with a picture. And the picture is kind of self-explanatory, but nonetheless, let me go and explain it a bit. There is this young entrepreneur, small, but has great ideas, but is struggling for some money, struggling for finance. And then there is this big company. The problem is not that the company is big, but the problem is that it has crossed the optimal scale and it's little bit on the declining productivity stage. The profitability is going down. But nonetheless, all the bankers are lining up in front of that big company to give them the money. And this is not because these bankers want to be unjust to this small young entrepreneur. It's just because these bankers may have no ability to understand the ideas or to verify the claims. So it could all be very natural outcome. The interesting point about this picture is not that we have no capital. You can see piles of dollars sitting out there. So the economy, this picture economy, has got lots of capital. The real problem is that this capital is sitting in the hands of wrong people, wrong companies, little bit less productive companies. And that's exactly the situation we are in India, and not only in India, in some of the other emerging market economies, more so in underdeveloped economies, and that's the problem we want to cure, and that's going to be my hum of this avalanche, which would be like the super growth and attending our target of Vikasit Bharat. So that's sort of the theme of my talk today, misallocation of resources. And the problem, therefore, is not about availability of the capital, and this comes as a surprise to many of us. When I saw this data first time, when I was a PhD student, I was surprised myself. Look at this comparison between India and USA. Already we are comparing one emerging market economy and one developed economy. How much capital do we have? The problem is not that we have less capital. Relative to the size of our economy, GDP, we have 4x capital. US has got 3x capital. In terms of capital, we have no scarcity. But look at the right-hand side of the graph, the productivity. How much workers in the US produce in 1 hour in terms of dollars, adjusted for price differences and inflation differences and so on and so forth? $85. Compared to that, Indian workers per hour produce $7 to $8 worth of output. That's 10x productivity difference. And this productivity difference is not coming because we have less capital. It's just because the capital is not allocated properly. So 10-15 minutes I will take today to convince you that the first order problem India is facing is not the scarcity of the capital, but allocation, optimal allocation of this capital, and how it is allocated matters. Let me give you a couple of illustrations of how the capital is misallocated in our economy. And examples are plenty. For want of time, I'm going to keep it to 2 or 3. First, what has happened to Indian credit sector, where the banking loans are going. Over the last 6 years, from 2018, 2019 onwards, the share of industrial loans, the share of loans given by banks to the industries has dwindled from 30% to 20%. But when the industrial share of the loans is going down, at the same time the personal loan share is going up from 24% to 33%. It's not a problem in itself. The problem is that India has not matured in its industrialization, and that is exactly Dani Rodrigues, who is a famous economist, his point about premature industrialization taking place in India. He made that point 20 years back for some other Asian economies, but we seem to be going through the same cycle 20 years down the line. And that's really something that worries me a little bit. But that's not the only margin at which we are allocating capital a little bit less productively. Let's look within industry, okay? Let's look within industry. MSME, the medium, small, micro scale enterprises, they are the backbone of our economy, but they are struggling to find finances. Believe it or not, the situation has improved a lot in the last 10-15 years, but the situation is that they are still struggling. Niti Aayog's recent report suggests that roughly 20% of MSMEs only find formal access to formal credit. They contribute a lot to our exports, but roughly gets only 7% of the share of the banking credit, so that's kind of skewed. whatever industrial loans we are giving, we think we are giving these loans for production, for expansion, for capex, innovation. No. 57% of the loans, more than half of our loans to industry are going for working capital loans. Those who know working capital, it's just a subsistence capital. Cash flow mismatch. It's not for capex, it's not for innovation. So the quality of the loans is not as much as we would like to be. That's really one more misallocation. Perverted trade credit system. This is one of the phenomenal points I learned over my economics journey over last 10, 15 years, is that smaller companies in India are financing larger companies. That's true also in some other emerging markets, but not as much. And the point is as follows, that when companies sell goods, their customers take some time to pay them back. Now, roughly, you can see the statistic here, which is computed from some of the data sets that I used. Small and large firms both pay their suppliers in roughly 100 days after they buy the goods. But large companies, given their bargaining power, are able to collect from their buyers, from their customers, all the money in roughly 53 days. But smaller companies are able to collect money only in 80 days, 83 days. That means smaller companies are struggling, larger companies are managing to recover money faster from their customers. Roughly, the situation is that smaller companies are financing larger clients for 30 days. That's not how the situation should be. Larger companies should be borrowing and financing smaller companies because they are not able to borrow at advantageous rate or large amount of capital. So those are some of the examples of misallocated or skewed capital allocation in our country. Why this happens? Why this happens is because business dynamism in our economy is very low, unfortunately, compared to rest of the countries. The exit rates of the companies. Only when the old, bad, less productive companies exit the system, new innovators can get the space they want to grow. Exit rates in India are 3% compared to Vietnam, 16, 17%. Why old companies are surviving for too long? And it's not a problem. Old companies, good companies should survive. They are the legacy companies. The problem is when unproductive companies keep on sustaining for too long. Two reasons. It's extremely difficult in India to downsize in terms of your labor. Labor laws are rigid. We are making good progress on this. I will talk about it at the end of my talk. Labor codes are extremely rigid. So companies cannot downsize even if they want to. Liquidation process, insolvency and bankruptcy code have been passed in 2016. Despite that, liquidation process is extremely lengthy. Statistics are plenty. I don't want to give those statistics here. Recovery rates are kind of very low. So investors are not getting their money back from the failed companies. What this does, if there is a problem in downsizing, you don't want to scale up first. If there is a problem in liquidating, you don't want to enter first. So the problems in exiting, problem in liquidating creates problems for entry, the problem for scaling up. That's exactly what academic evidence tells us. And that's the point we have to. And this is why I want to stress on these points, is because they don't require you to have any more capital. It's just a change of mindset, change of laws, and change of regulations that can do this and can bring a lot of innovation to our country. And that's one of the important points I want to show. Look at the cycle of how a company in India survive. This is a life cycle of a typical manufacturing plant in our country. A US firm starts with one worker, one is just a scaler. Over 35 years, it grows its employment by 8x. In India, we grow it from 1 to 1.4. We don't scale up enough. We don't scale up enough. And we know that we don't scale up because we are fearful of scaling up, rigid laws or rigid exit patterns. Exiting, failing is not a bad thing. In US, businesses gets liquidated, the innovators try new things. That's it, it's not a taboo. In India, it is. And what is the end result of all of this? That we are sustaining too many unproductive, low productivity firms. Look at this graph. I don't want to do too much on this graph, but look at the Indian, this just tells you how many companies are there, or what is the mass or the share of the companies in for various levels of productivities. Ideally, you want to be on the right-hand side of this graph, high productivity. Unfortunately, many Indian companies are on the left side of this graph compared to China or compared to the US. And so we are surviving a lot of old, unproductive companies, And that's where the idea for today's talk comes, the power of reallocation without needing any more capital, the power of reallocation. Recent research by two fantastic economists from Chicago and Stanford, Shi and Clino, they do this exercise. What happens in a thought experiment if you were to move capital from these bad, unproductive companies, but who are sucking up the resources of the economy? If you were to remove these resources from these companies and transfer them to productive, small, right now, but very productive companies, what would happen? They did that exercise in their academic paper, and the exercise reveals tremendous amount of productivity growth for India, roughly anywhere between 40 to 60%. That's mammoth. We can achieve our Vikasit Bharat goal, not in 2047, in 2037, 2040, if we were to unleash this type of productivity growth. And that's roughly what motivates me to focus more on reallocation rather than introducing new capital, foreign capital, or whatever it is. We need that. We still need that. But I think the first order problem is misallocation. So it pains to talk like this about our own country. And it's not that we have not done anything. I think government has done a lot of things over successive years. The successive governments have done a lot of things. I will talk about that and in last 2 slides, and then I will also talk about what needs to be done. Labor, we talked about labor, that labor rigidity in labor markets. The fact that you cannot scale down also means that companies are employing more contract workers, they are not scaling up enough, and so on and so forth. Recently, Parliament has passed new labor codes that gives more flexibility for companies to downsize. The hard limit was if you were having more than 100 workers, you needed state government permission, central government permissions to fire even 1 worker. Nobody wants to fire. But if you have problems firing, companies will not even hire. So problems for firing creates problems for hiring. That's the whole point and the mindset. Why we need labor reforms is when India opened up in 1990s, states which had more pro-employer, not excessively, but pro-employer, pro-industry labor laws benefited a lot more than other states. That's a clean evidence coming from some of the seminal papers, academic research. And so that's why we need to move in this direction. So I think what labor codes have done recently is excellent. It's in the right direction, exactly the type of solutions I would have suggested for the economy, but we still need to do a lot. 300 is again just another limit which we are going to even reach in the next few years or have already reached. So we are in the right direction, we just need to solve the scale problem. Skilling is going to become extremely important where we have the focus, but we have not been able to translate it into action because AI displaced workers are creating capabilities to adopt to the newer environment is going to be challenging for our workforce, and we need that. And I'm talking about bottom of the workforce, not skilled workers in any case. For MSMEs, we have done a lot. I hope I'm doing okay on time. Somebody is going to tell me. Okay, good. For MSMEs, the sector that I talked about, we are doing great. We have introduced a lot of solutions. Some more solutions can be introduced. Government introduced MSME credit guarantee scheme. One of the problems why banks do not want to lend to MSMEs is because they do not know a lot about this private company, a small company. It's very difficult to verify the claims. It's not that bankers want to be unjust to this company again. How can you resolve this problem? Government said we will guarantee if the small companies default. Lend them. But once you lend, you build a relationship, you understand the business, you resolve what is called as asymmetric information problem. That has happened in India. Good. Trade credit cycle. Various laws in India now, MSME Act, Income Tax Act, incentivizes customers to pay MSME companies on time, within 45 days. At least the act is there. Implementation is still a little bit here and there, but I think we are moving in the right direction. There is a fantastic platform called Trades, where small companies can take their receivables from their customers, sell it, and get funding against it. Okay? So there are a lot of things that Indian government and RBI collectively has done for MSME sector, but we can do a little bit more, taking cues from some other economies. On Trades, you can go and sell your assets to get money from the banks, but how about something called as trade credit clearing house? Right now, the situation is that A needs to pay to B, B needs to pay to C, and C needs to pay to A. Everybody is scrambling to go to their banks and try to get funding. How about we set up a aggregator in between who can, the problem is ABC don't know this. C doesn't know that A is going to paying B and B is going to pay C, C is going to pay A. C doesn't know, B doesn't know, A doesn't know the full structure. So what they do, they cannot coordinate. Therefore, the solution here is that some aggregator computes these positions for all the players and tells B, okay, the only thing you need to do is go and pay 20 to C, that's it, banking capital gets freed. It's a difficult problem to solve. I've made it very easy. There is risk in this. What if B's claims are unverifiable and so on and so forth. It's a difficult problem to solve, but some countries are moving in this direction. We need to think a little bit more innovatively. Our chief guest today mentioned this, and I would just like to reiterate, and I will close my speech. We have done excellently well ahead of the curve in terms of where the world economy is or the world markets are in terms of payments revolution, UPI. And what UPI has done is able to create histories, transaction histories for those who were otherwise outside the banking system, the credit system. And now NBFCs and banks are leveraging those UPI histories to lend. For example, empowered by QR code technology, you get the offer on your QR code based upon your UPI transactions. So bankers are going to assess your UPI transaction, make an assessment about your repayment ability, and lend you in terms of that repayment ability using QR code. Fantastic. Governments are setting up alternative credit score systems. I know of a couple of governments, we are working with one in sandbox experiment. And so these are extremely, extremely useful exercises that will bring lot of unbanked, more productive customers, businesses into our system, improving the productivity of our economy. So what are the takeaways from today's talk? India does not suffer from lack of capital problem anymore. We need to work to resolve the allocation problem. We need to put capital in hands of good people. By good, I don't mean, good also means non-corrupt, good also means productive. Mechanisms, labor laws, freeing land labor. I did not talk about land, but land market can be revolutionized dramatically, speedier liquidation process. And current policies appear to be on the right track. And I think all of this is going to has set India on a path of momentum to achieve our collective goal of Vikasit Bharat. Thank you.